folks, Dan Frio here with your closing bell for July 17th, 2025. So mortgage rates, let's just say they didn't really move at all today. Okay, so we have an interesting week that I want to kind of go through with you guys, kind of leading up to where we're going to get tomorrow, because tomorrow we have a lot of sales reports on housing, and we're going to get there in a second. But I want you guys to understand, this week we had a lot of information that came in that actually calmed the markets, I'll put it that way, because we had consumer inflation coming out. We had producer inflation coming out. We had productivity coming out. We had a lot of things, even a jobs report come out, and they all came out pretty good. I'm going to recast what our economic calendar looked like so far this week, because if you're watching this video, you're most likely looking to buy or refinance and trying to figure out what in the heck's going on with those things over there. So let's get to today's video. So here's what we saw in the bond market today. It was, let's just say it was flat as a pancake. It's plus 0.6, and that's how we got the little revision in mortgage rates right there. But here's what the economic calendar looks like, and this is kind of a head scratcher. When you go through the week, now we really didn't have mortgage rates move much at all this week. I'll show you that bond here in a second. But let's just recap what we've seen so far this week, and it helps to understand this. At the beginning of the week, we had inflation on the consumer side, and it actually came in pretty good. Every indice went up just a little bit from where it was, but they were all on point. 5 out of 6 were on point of what economists were expecting, or lower. There was only one number that came out above expectations, and it was right through here, and that's what made the headlines. Then on Wednesday, we got producer inflation. That's another reading. Look through here. 0. There is no producer inflation out there just yet. So when are the tariffs going to hit? Well, it could hit sometime soon, but that's also not rolling over to the jobs market and everything else that everybody thought it would be. Because we go down to the jobs market that we got today, we had right through here, continued jobless claims. Well, it's staying sticky right at 1.9 million. And then if you go down to initial jobless claims, those aren't falling off a cliff either. We had 228,000 people filing unemployment claims last week. This week, we thought it was going to be at 233. It came in at 221. Not a bad number. So if you look at these numbers through here, we also have inventory and a bunch of other things. I'm going to go over, let's take it over to Rick Santelli over at the CNB Stock Exchange. I'm going to let him come in with a report. He's actually going to talk about business inventory, kind of putting all this together for you. And then we're also going to get a real estate review on here as well with Diane Olick. So let's get over to CNBC. Let's let them take it away. They're going to give you some inventory and business reporting that we had today, and Diane Olick with some real estate news. When we come back, I'm going to show you the real estate news that's coming in tomorrow that we'll be paying attention to and how that might affect these things over through here. So let's get over to it, folks.
Back to Rick Santelli. Morning, Rick.
Good morning, Carl. Yes, business inventories for the month of May, and inventories have been much more scrutinized of late due to tariff issues, and, well, they may be affecting this. Unchanged for the second consecutive month. So we see that April and May unchanged. But if you look at January, February, March, up 0.4, up 0.2, up 0.1, you get the feeling, of course, that we pushed so much ahead. Inventories built on the business side. Now they're starting to wean down. The question is, are they sitting somewhere? Is there plenty of inventory? Are we going to whittle it down with sales? So we want to pay particularly close attention here. And I know Sarah pointed out 30-year bond and 5%, but there's an awful lot of eyeballs that just watch us get very close to the big psychological level in 10s at 4.5% and then back away. There's more data out. As a matter of fact, National Association of Home Builders Sentiment Index also hitting the wires. And for that, we head east to Diana Olick. Diana?
Well, Rick, home builder sentiment in July rose 1 point to 33 on the NAHB index. That is right along expectations, but anything below 50 is considered negative, and the index stood at 41 last July. It has been negative now for 15 straight months. The slight boost came from the recently passed Budget Act, which provided for some tax relief for households, home builders, and small businesses. But the builders still cite poor affordability conditions, particularly from elevated interest rates, as a major headwind. That's why 38% of builders said they cut prices in July. That's the highest share since NAHB began tracking this in 2022. Just 29% were cutting back in April. Now, if the index is 3 components, current sales conditions rose 1 point to 36, sales expectations in the next 6 months increased 3 points to 43, and buyer traffic saw a 1 point drop to 20, which is the lowest reading since the end of 2022. Regionally, builder sentiment was strongest in the Northeast, where it rose 1 point, flat in the Midwest, and dropped further in the South and West, where it is weakest. Sarah, back to you. Okay, thank you very much.
Fantastic
Diana
interview there. We kind of lumped all those together. So does this mean, or what does this mean for housing? Well, what we're seeing on our side of the equation, there's a lot of people right now looking to buy houses, but they're not going with the new construction like they've been doing over the last 2, 3, 4 years. That's where most of the traffic's been going, to new construction. Well, those houses are getting bigger and bigger and bigger, and it's mainly harder to afford. So that's why I think a lot of existing home sales will come back to the market. Even in my neighborhood here, I think there's now 4 or 5 houses on the market. That's good news, because there was really my neighbor's house. It went up for sale and sold within like 48 hours. So that's what we're seeing in the overall markets. Now, what effect did that have on the bond market today? Because we're trying to figure out what's going on with these things over through here. Well, let's get to it. Right through here, here's what Rick Santelli was talking about. Most people follow the 10-year Treasury. This is probably the most widely viewed index that's out there. And a lot of people, they'll say, if you monitor this, you pretty much know what's going on with mortgage rates as well. Well, you kind of do, and there used to be a really close correlation with this, but there isn't anymore. So what we follow now is what's called the MBS. Now, this isn't publicly known to everybody. It's hard to find. So that's why people just view my channel for the first 5-10 minutes for each morning and each evening, and you'll know exactly what's going on with interest rates. So here's what's going on with the bond market right now. This chart over through here. If you're new to the channel, here's how you understand this chart. This is a bond, a mortgage-backed security bond. You can see that rate, UMBS. You might even hold this if you have a 401k with some fixed income investments. You might even have this in there. But here's how this works. As the bond price goes up, yields or interest rates come down. Okay, they don't represent like over here. This one's pretty simple. If you look at the 10-year Treasury, the yield's 4.43. It's down 0.005 for the day. Well, they don't do that. I wish they did this with mortgage rates over here, but they don't. They just issue the price of the bond. So this is how it works. Basically, the number, if this goes up, rates are coming down. If this goes down, rates are coming up. And the bigger this number right here, well, the bigger the adjustment over through here. So here's what we're looking at. That's what we're seeing in the markets for this week so far. If you go to tomorrow, now here's what they were talking about. We're going to pay attention to building permits, housing starts. This is month over month. Housing starts, I think this is year over year, and then some of these other factors. But I don't really think this is going to play any role in what's going on to the market right now. So let's get over to the equity markets and see how they're faring and why. Well, if you go across here, it ended the day same thing, folks. Cinderella story so far today, all the way across the board. The indices are in the green. We have the VIX down 3, almost 4% to 16. We're in the teens now. This is great news. Let's see what oil's doing. Please. No, it's up to 67. Folks, the reason why I hate watching this number go up, this is a huge part of the consumer inflation, the producer inflation, and everything else. So as this number goes up, look, it's up almost 2% today. It's a big swing. That affects the inflation numbers. So that's why we really pay attention to this. We want this number between 65 and 60. That puts our inflation levels right below where we're needing them to be. Let's get over to where crypto is for the day, 120. That should be a record high on Bitcoin. So that's saying, well, the market's right now. Here's how I interpret this. When I go to this rate through here, I'll go to here. We need this to pop back up again. When I look at the VIX and it's down almost 4%, then I see the Dow Jones and everything up and away. I don't see bonds doing very well today. But then when you go to things like cryptocurrency, this is, a speculative play. So when you have this up and this up and this up and bonds flat, it's basically telling me people are continuing to invest in the markets, and I think we probably have another record high on the S&P, so we'll focus in on that. So far right now, if you look at the overall economy, I'll say it's not looking all that bad. Let's look at the S&P 500 rises to new closing record, boosted by solid earnings and U.S. economic data. So right now, it looks like a lot of the data that we're seeing is a thumbs up over the economy. Look, Netflix just posted earnings review. Revenues grew 16% in the second quarter, and a lot of banks came out with their profits this week as well, and profits all over the board are up. So if you scratch your head and think, okay, if the economy is that bad and prices are going that high, well, companies are still having record profits. Can they cut their prices on a lot of things to not actually push the tariffs onto us? That might be something that we're going to watch for. So that is what we're focusing in on the news so far today, folks. With all this economic news out there, basically the market was flat today. Mortgage rates really didn't move at all across the board. So that's what we're looking at for today. Now, one more piece of the puzzle that I want to go over with you guys. Who am I and why do I do these videos? Well, pretty interesting. I've been doing this. I've been in the mortgage business for 35 years now. And I used to advertise on Christian radio in Chicago. I did that for about 15 years. But during COVID, I was unable to do the radio show. So they said, well, you basically have to do everything at home and then send us the recordings. Well, I took that data and I'm like, well, let me see if I can podcast this stuff and YouTube it and see where it takes me. Well, it took me to where we are today. So folks, right now I work at a federal bank. That means I'm federally licensed, so I'm in all 50 states as well as Puerto Rico. I know somebody's going to slam me on the 52 thing, but there are 50 states as well as Puerto Rico, and I'd love to be able to work with you. I work at a federal bank that gives me all those licenses, but there's a unique thing that we have here. We say our slogan, or I created this slogan, one application, one credit pool, we're going to shop your loan over 30 different lenders. How do we do that? Well, the cool thing about the bank that I work at, and it's a federal bank, is we're set up with 33 other lenders. And you might ask, well, why? Well, it's to help you guys. So when you're out there trying to navigate a mortgage, what are you looking for? Well, you're looking for that program to suffice for what you're looking for. And then you're saying, okay, I need to get different quotes. I need 3-4 different quotes from different lenders to figure out what their rates are. Well, with our system, you can put in one application, one credit pool. We're going to shop your loan to over 30 different lenders, and you will use me during this whole process as your loan officer. How do you do it? Well, check out the rateupdate.com. Here's our website. We have a whole bunch of information here, but if you really want to find out how we do things, schedule an appointment with us. Request an appointment right through here. You can ask me a question through here, right through here. Ask Dan. You can put in your application or even give us a call. We do have a 5-day HELOC that's coming. It's messed up right now. They are working on this, so you can't really go anywhere with that. But we're going to have a HELOC available to you guys here in the next couple days. So if you're basically, you have an interest rate on your current home, 2, 3, 4%, you're like, Dan, I got a ton of equity in this thing. I'd like to get to pay off some of these credit cards, but I don't want to, hand in that really low rate to do a debt consolidation. Well, don't. Check out our 5-day HELOC, and it'll be available probably within the next 48 hours for you guys to check that out. But if you're looking to buy a house right now, well, check out this right through here. $7,000, up to $7,000 of down payment assistance if you're looking to buy a house. How do you qualify? Check out the video right through there. If you're looking to refinance, we have tools up through here. And if you're in the process of getting a mortgage right now and you have a quote, you want me to review it, and review it with my 33 lenders, we'll just upload it right through here. It says loan estimate review. Click that button right through there. You're going to load up your loan estimate in here. Tell me a little bit about what you have. What I'll do is I'll send you back a personalized video breaking down your loan versus what I can get you. See if we can save you on the fees, maybe in the interest rate, or maybe in both. So that's our report for today, folks. Mortgage rates are basically flat as a pancake today. All we're getting tomorrow is housing starts and some housing data. Don't think that's really going to affect the markets. So pay attention to the tariff news. That's what's going to be making the news, and that's what will be affecting these things mostly. So thanks for watching. God bless. Have a fantastic evening. Please be safe out there, folks. See you tomorrow. Bye-bye.